Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm the CEO of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen. We'll begin shortly after. Thank you. Faust, Bill, Mark, how are you? Happy 4th of July. Hopefully everybody enjoyed spending time with friends and family. All right, let's see. Discord, guys. Okay. Okay, we can start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always more welcome new subscribers. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education purposes only. It should not be assumed that the future trade picks will be profitable or will equal past performance. If you're new to trading stock and options, I encourage you to visit this link, optionscreening.com, to understand the risks associated with trading stock and options. Fred, good morning. Again, so let's go over the trading psychology. The goal is to become disciplined and confident trader that takes time and practice. I think the key is repeatable process where you have a written down trading plan and you can give it to another trader and they can execute. And achieve successful results. Part of my trading plan, the most important that I think is number of positions and position size, right? I can't the idea of the economy of control, that I can't control whether the market is going to continue going higher or it's going to go lower. I can have an opinion and I can trade at that, but ultimately I don't know. But what I can control is number of positions that I have and the position size. Number of positions, I mean, it's if you're new to trading or you still don't feel like you're a disciplined trader with, where you have a mechanical trading plan, I would encourage you to consider only 4 positions at a time, right? If you're more experienced trader, you're confident, you're managing larger portfolio, okay, 5, 10 positions, 15 positions. I mean, it just depends on, your level of experience. Also easily said than done, right? A lot of people expected that this is going to be, either flat year or down year, and instead we have a record rally in history of, technology stocks, right? Nasdaq for the first 6 months of the year. So naturally, you have a fear of missing out. We all experienced that. Microsoft continue goes higher, Nvidia, Google, I don't know, Pelletier, and Oracle and Adobe. So you naturally want to jump on the train, and there are a lot of stocks that you want to participate in. The idea is to be self-aware. Ask yourself why many times, why you get into this trade, write it down in the journal, right? If it's because market is up 40%, right, technology, maybe that's not a good enough reason, or because everybody is promoting that next 6 months we're going to have another 20-30% rally. But if you do see a technical setup, you see some kind of a breakout, you see good earnings, and it fits your setup, okay, you can enter the trade. But again, I propose for no more than 4 positions, because at some point we will have a meaningful pullback. And then when it happens, you don't want to be caught with, if you have 4 positions and each position is you down 2.5%, you're down 10%, you can recover from that drawdown. If you have, let's say, 6 positions and you let 5% be down on each position, well, 30%, it's very hard to recover from 30% drawdown, right? Every time my portfolio goes down more than 15%, that's when my fight or flight response to kick in. The only way not to trade emotionally is, again, number of positions, position size. Compounded investment, right? Set the goals. Treat trading as business, have weekly goals, monthly goals, annual goals, right? And quarter over quarter, year over year, continue to raise the bar. But start with reasonable expectations, right? Market VIX is low, right? There's no fear in the market. Volatility is down. Spiders don't move more than 1% a day. So if you can capture 0.5% by holding position a couple hours, couple days, I think that's reasonable. If you can make 0.5%, 1% a week on trading and have more winning trades than losing trades, I think this is a great goal to start. And that does compound, right? Week over week, months over months. Those are very important concepts. Cash, right? Very important to have 30-40% of your portfolio in cash based on your outlook on the market. If you think we're in the bull market or if we're in the bear market. Wait for 2 to 3 days to confirm the trend change. We're a very strong bull market, right? Bull rally since October, since March. Very few days or few weeks where we had any meaningful pullback. Usually it's always meet with buying pressure. So you have to wait at least for 2 to 3 days to confirm a trend change, right? As long as we are staying above 432, right, the August highs, as long as we're staying above August highs, the almost 52-week highs, that's a breakout in Nasdaq, in spiders, in other stocks, we can continue make incremental highs, right? If we drop below August highs, and again, not for 1 day or for 1 hour, but for 2 to 3 days, that would be a meaningful breakdown, and I would say, okay, now the trend is changing. But until then, we're in a bull trend. Allocation, 2.5% is the maximum risk per position. Allow yourself more time, right? If you think the pullback is going to start July, August, roll your positions to September, October. Look at the ABC patterns. Do not sell naked options. Avoid trading on emotions. All right, so number of positions, I mean, 4, obviously, fear of missing out. Sometimes it's very hard to contain yourself, but that's, again, I encourage you for that reason, write it down in the journal, because when you're writing them down in the journal and then you read your thoughts and you read then you can question your validity of your, of the trade, whether it's based on emotions or whether it's, based on some kind of a technical setup. In terms of stock forecast toolbox, it sees 444 to be overhead resistance, 439 to be support, right? So I would, so short-term market model sees that the market is overbought, right? And potentially can pull back to 439 today. If you're short-term aggressive trader, then 439 is your buy signal, and 444 is your sell signal. Right, so let's take a look. Let's look at spiders. So pre-market, we are down, 0.5%, pulling back to 440. Right, session low. Friday's or Monday's session low. Sorry, Friday's session low. Right. So Friday's session low. Right. We had a pretty strong rally on better than expected economic data, PCE, inflation data, and we are retesting again 52-week highs. And the breakout is August. So as long as we are above this trend line, right, the breakout that we've seen, bulls are in control. We're trading at the session low. That would be your kind of at least short-term support number 1, where we're trading right now. Next step would be to close the gap, right? To close the gap. And then finally would be this trend line, right? So that's your support number 1, short-term, 441. Model sees 439 to be the overhead resistance. I think that's somewhere in here, support number 2, the gap. And then the trend line, support number 3. As long as we are above support number 3, this is your resistance number 1, right? 52-week high, resistance number 1. And then if we do break above 444, 445, that opens up the door. I mean, 450 usually, 450, 452 is your psychologically important level. It's, almost 76, 80% retracement from all-time high. And that would be the setup. So in terms of position size, I would give, for day trading, I would allow myself maybe 1% stop loss, right? If we opened up at 441, we may or may not close the gap. I would just say, support number 1 is my stop level, right? If we drop below this gap, okay, then we're probably, again, trading sideways. So support number 1 is, let's see. Let's zoom out, 1 hour. $438, model said 439, so let's say 438, right, 1%. So 1% stop loss. If we break through 444, we'll probably get to 500. So maybe you're looking for 1 or 2% to the upside, 1% to the downside, 1%. And a $10,000 account, you don't want to risk more than $250, 2.5%. I would do it in increments of 2, so I would always risk 1%, right, on the account. So if it's $10,000 and 1% stop loss, that's $100. And then if we do drop 438, if you're still staying bullish, you might want to add to your position if you think this level will hold. If not, then you can exit the position. So again, total position, no more than 2.5%, and I would break it apart into parts and risk no more than 1% of your account value. So $10,000, it's $100. $20,000, it's $200. $5,000, it's $50. But always the mechanical trade to me meaning the same size, same, and you never risk more, right? So buying the same number of shares is usually, I consider this to be a mistake, right? If you buy 100 shares of HYG at 74 and you buy 100 shares of spiders at 442, I would say that's a mistake, right? Because you have different exposure to spiders and you have to high yield. If you buy 100 shares of semiconductors and 100 shares of, or let's say $1,000 of semiconductors, thousands of dollars of high yield, I mean, that's better, but still, semiconductors probably move two times the high yield. So then you probably want to adjust for that also. So that would be my proposal. Meanwhile, rates, it's all China, right? The data, so headline news from China, they were down, right? So looks like, again, services data is worse than expected. So China is pulling back again. It's fluctuating between gains and losses in June, right? It's probably in the middle of the range, June range, between 25 and 30 or 29.5. Germany, Europe, better than expected. Inflation data, better than expected. Manufacturing data. I'm not sure why it's down, but maybe in sympathy, right? The idea that Germany and Europe may be in recession, right? Maybe. So I would watch 27.64. So we have Europe selling off, China selling off, not selling, pulling back. Probably a better term. And let's see what else is interesting. Bitcoin also pulling back. It's kind of trading flat for the past couple of weeks after the pretty strong rally. So when China pulls back, you have materials. It's pulling back. Materials, copper, metals, miners. People are rotating into silver and gold as a hedge. And let's see, small caps are down less than 1%. QQQ's turning flat, actually. Value down, spiders 30 basis points down. In terms of yield, kind of flat, right? 10-year yield has been trading, trying to break out of probably have to go to daily chart. So it's trying to break out from May and June high, right? So May and June high. What else? In terms of news, we do have Fed meetings, right? A lot of people, from what I've read, people are going to try to read into, is it 2 rate hikes, 1 rate hike? Not sure if it matters. But, short term, it could have some kind of a move up and down. Then we have services PMI. That could be, that has been a strong part of the economy, right? Services, people flying, people, going to casinos and traveling. So, if it still continues to be strong, then the market could continue to rally. If it's weaker, like that, then, market will continue to pull back. And then we do have U.S. unemployment rate, right? That's an important data, right? Everybody's looking at the data and deciding whether, we are in recession or not, right? As long as unemployment is low, then you can't really have any recession. But if unemployment does tick up, then potentially you can have a recession. All right, now let's take a look at the positions. So let's look at the elite circle. You can find the same under yellow tunnel, dynamic power trader. So if you look at the trader log or dynamic power trader in yellow tunnel, let's see, today no positions, okay, no orders. Let's look at the positions. Bob, Desi, welcome back. Fred, okay, so let me see. So Fred question. Model C's 10-day out spiders up 4%. My thought process, next 10 days, I mean, we have unemployment data, and we have, the next week, we have earnings season starts, right? So right now, everybody's going to think about earnings, right? And there's two things that can happen, right? One is revenue is better than expected, earnings are better than expected, and it justifies almost double the multiple that happened from October to July, right? From October to July, a lot of stocks almost double their multiple. So if their revenue and revenue projections are continue to grow, and there is no signs of recession, and strong consumer, strong whatever the sector they are, then we can get to 461, right? If JP Morgan comes out and Bank of America, Progressive, Taiwan Semiconductor, Delta Airline, they're going to all start announcing earnings next week, right? Or after the following week. And if you do see, you know, that the revenue and projections are being revised down, or they don't meet the analyst expectation, then you will have probably, you know, pullback, right? So that's, you know, we're kind of reaching that junction point. And every earnings is the same, right? I've said that in Q1, I've said that in Q2, but, you know, Q1 in January, Q4 earnings were better than expected, right? In April, the Q1 earnings were better than expected. So now we're in July, we're looking at Q2. Q2 is where we had liquidity issues in the banks, right? So now we're actually going to know how bad, you know, or how good their balance sheets and deposits are. So, you know, that will set the tone for the rest of the year, right? So right now, as long as we're above 432, we can definitely get, I don't know about 460, but we can get to 452, right? We can get to 456. Totally reasonable to expect that in the next 10 days. If the earnings season next week going to be worse than expected, then the pullback. Thank you, Fred. Transocean got upgrades. I exited out early. No, better early than late, right? Yeah, so Transocean retesting 52-week, I mean, year-to-date high. So thank you. So it was a good trade. I did exit out last week. I think this rally is probably overextended, so it makes sense to start being more conservative. Okay, thank you. Any other questions? Okay, so let's take a look at the positions. Okay. So DBX, I mean, I did, you know, we're in second half, right? I encouraged everybody to rebalance their portfolio, right? We had a very, you know, if you were a bull, it's great. I think that's the time to maybe take some profits. If you were bear, obviously it was a very difficult 6 months. So you need to decide if you want to shift to bullish bull camp, which a lot of, you know, one of the reasons market is up is because bear, you know, it was such a well-advertised recession. Everybody, a lot of people got into that camp, and now they're capitulating, right? A lot of bears capitulating, and basically, you know, they have to show performance to their investors, so they're buying long positions. So I don't have many long positions. So I mean, I do trade spreads, so that helps, but most of these spreads are bearish overall. So I'm starting every week. I'm going to start adding new stock positions just to offset some of my bearish positions, as long as the market, you know, continues to rally. So I did add DBX. It had a pretty clean breakout. They are jumping on this AI, on the AI, you know, train. So you do have a clear breakout of August highs, right? Kind of a lot of stocks. That's the pattern. There's really no overhead resistance. So as long as we're above 25, I think, you know, the rally can continue. It is done with the market, 60 basis points. So that's DBX. Small caps, I closed the bullish position. I think that, a lot of people ask, what would make you change your opinion? For this bull market to be kind of more of a classical bull market. In a classical bull market, you have oil rally, you have small caps, you have high yield rally, right? Rally meaning that now they need to break their August highs, right? But we're still in, for small caps, we're still far away from August highs, right? So it has been underperforming, but usually 8 months after you reach the bottom, usually oil and small caps are leading the market, not lagging the market. So to change my mind, I would have to see, small caps above 200 and continue to go on high. You have a broad-based rally, right? That's a lot of criticism of current bull market that's not broad-based. And then you have meaningful rally in crude oil, probably the same thing, something above last August high. So at least get to 100 level or something along those lines on crude oil. Because if nobody's buying oil and they're cutting the production, that means the economy, the global economy is slowing down. So for that reason, small cap stocks, I closed the bullish position. I have probably not going to break. It's facing a lot of overhead resistance, right? This level. We've been at these levels many times. Right in June, we were here in March, we were here in November, December, September. So a lot of rallies have failed at these levels. It did break the downtrend, but I still think that by August it will stay below this level. So I'm still bearish, 190, 195 call. July 335, 340 call spread, that would most likely it's at maximum loss, so this trade is going against me. September, I do have put spread in September. Also, they lost most of its value, so I'm waiting for, I'm personally waiting for breakdown confirmation, right? Because as long as we are elevator up, there are no signs of break, then there's no reason to add to bearish positions. So for now, probably, QQQ has to drop below August highs, all right, to have a meaningful pullback, or at least maybe 350 level. Right? For now, it's actually turning positive. So still, people are bullish on the market, okay? So if you're not comfortable trading options to hedge your portfolio, one way to hedge is buying SH. Right? So buying inverse ETF of spiders, SH, buying silver. Looks like silver was building a bottom for a few weeks. Actually trying to break out of this double bottom around 200-day moving average, 2116. Again, wait 2 to 3 days. Probably you want this to stay above 50-day moving average, so 2196. But it looks like it's building the bottom around 20.5. That's another way to hedge your portfolio, buying silver. Or TLT. Silver, TLT, SH, they're highly correlated to each other. People are using them as hedges. Same thing with TLT, right? It's sitting at June lows around 101. It's 102 right now. It needs to, I think for the pullback to start, TLT has to be above 103, 104 level, right? It has to break to this, stay above 50-day moving average, above 200-day moving average. As long as it's below 50 to 100-day moving average, it's still a bearish setup. Hard to hold on to my 370 spiders target. I agree. This is only kind of, the only way we can get to 370, 370 or 350 if, we have signs of recession, right? So until then, you don't really have to worry about that. I think Personally, again, I think as long as we're above this trend line, there's no reason to be bearish on the market or add to bearish positions. If we do drop below 430, then I'm personally going to start adding to my bearish position. Until then, we need some kind of a news, right? And right now, most of the bad news getting ignored. Most of the good news people follow. So as long as that's the trading environment, then this bullish bias will continue. I mean, obviously, we're at record levels of bullish sentiment. Bears are at the record level of capitulating. So we are all at trading levels, but you need some kind of a trigger. Earnings season, I think this will be the trigger. It will be either the trigger that the rally continues, or we go to 460 for all-time high, or earnings are worse than expected and pulled back. But earnings, they're going to start in 2 weeks. People might want to wait for Apple, right? As long as Apple is an uptrend and every day makes new highs, right? Then you're not going to have any meaningful pullback. So, and Apple is in 21 days, right? So in 3 weeks, you'll have to wait probably at least 3 to 4 weeks to see any meaningful pullback, because as long as Apple has not announced earnings, I don't think you're going to have any meaningful pullback. Pullback to minimize the loss. All right, Todd, thank you. All right, so what else? So we talked about silver, TLT, XLF. Right? Yeah, XLF at the last position. I did add August position. Right, it looks like small caps, right? Small caps underperforming. We do have, looks like, a few days of lower lows and lower highs in XLF. So we'll see how far down it's going to continue going lower. And XLF. So small banks, I mean, not small banks, but XLF, large banks, I think what is KRE is probably down too. Right, KRE is down. So regional banks, large caps, high yield, small cap stock, they have underperformed the market, and looks like the trade is still intact. So I added to the bearish position in XLF. Let's see. What do they look like? Small caps. And XLF. Okay. All right. Any questions on the positions? All right, 850. Discord, guys, thank you for participating. Any questions? All right, any questions so far? All right. Look, semiconductors. I didn't make any comments on semiconductors. So, I mean, yeah, because I said I'm going to talk about NVIDIA and Microsoft. So, AI stocks, semiconductors. I think, at least for now, as long as we're below 156, that does look like really, this AI trade is overdone and it's coming to an end, right? Kind of this triple top. So, but again, you want to wait for a breakdown right through the neckline, which is 144. As long as we are above 144, this could be just, it could be something like this, right? Higher highs, higher lows. Taiwan Semiconductors announcing earnings. Is it what, next week? I think next one is TSM, kind of at the forefront of the AI revolution, right? Very similar price pattern. So 15 days, right? So in 15 days, Taiwan Semiconductors is going to announce earnings. That we'll see. So I think they also have some. I mean, NVIDIA is obviously best of breed in terms of AI participation, right? Maybe Broadcom is the second best. Let's see. I haven't looked at Broadcom for a while. The same thing, right? Kind of a triple top. Broadcom and and NVIDIA maybe at the top of the range, and AMD and Intel already broke through the neckline, right? So they're a little bit weaker. But as a whole, the group is obviously pausing the rally, waiting for the earnings, right? In 2 weeks, if Taiwan Semiconductors comes out and says, listen, we're doubling our revenue projection like NVIDIA, well, then the rally continues. If they say, listen, we don't really see any orders for upgrades of infrastructure to support generative AI, well, then you're going to have then pullback will continue. So a lot of it will depend on earnings. Obviously, I'm bearish, but I have no idea what they're going to say. All right, I don't think anybody knows. So, and in terms of Microsoft, I mean, it's turning positive. It did pull back, but same price pattern, right? Like this, maybe triple top, maybe head and shoulders. But again, I would wait for this neckline to be broken, right? It needs to drop below 50-day moving average. And as long as that's not the case, then at least as of right now, this uptrend is pretty much intact and continues to go, whether it's Microsoft, Google. Google is a little bit more bearish, right? It does look like it already tested 50-day moving average multiple times. AI has been in the news, right? They are, sharp pullback, right? Did break through. I mean, basically give up most of the gains from earnings, right? And then Pelletier. And those are the most well covered and famous AI stocks. But you can see the rally is on pause, right? So rally is on pause. The only way to break out of this consolidation, right, it's going through some kind of consolidation. The next catalyst are obviously earnings, right? So some of these stocks will continue to go higher. Some of these stocks will, break down. Which ones? We'll just have to wait and see. Jeff, is Netflix overstretched? Netflix is in the news, also very well covered stock. Everybody's buying Netflix. They're cracking down on passwords. That's the main catalyst. Double top, right? Same thing. If you're bullish on Netflix, you want to probably at least wait for the breakout. Earnings is in 2 weeks. It could be that into the earnings you have rally in Netflix. Right, it is approaching a lot of overhead resistance around this 479. Right, this is where it spent majority of 21 until the earnings. Right, they have these 2 bad earnings. You can squeeze another 10%. It's possible into the earnings. Some of these strong, because it is well covered. They're getting upgrades. Looks like they're executing on cracking down the passwords, and people, staying on board and still buying. And looks like Disney is not doing well. Probably Disney Plus is, one of their main competitors. Their picture looks pretty bad. So I would personally, I would at least wait for. If I want to jump on the train, I wanted to at least, before I jump on the train, let's see. Yeah, I wanted to see at least 2 to 3 days above this level, right? Because in the past 4 weeks, we've been trading between 450 and 408, right? For the past 4 weeks. So if you want to be bullish, I would wait for break above 450. Day 1, day 2, day 3, break above 450. Then we'd probably get into at least 480, right? If we don't have a break, then obviously last week low is 412. If you don't want to wait, I would do half of the position, and your stop level is probably around 400 level, right? If you drop below 400, you don't want to be in the trade. Patrick, Tesla. Tesla had a, Tesla trade is still on, right? Rivian trade is still on. They are delivering more cars, right? I can see Rivian on every corner. In Chicago, same thing with Tesla, record number of deliveries. We do have this gap. So as long as we're staying above this gap, potentially we can continue going higher. For now, I don't see a meaningful breakout above this June 15th high. Earnings are in 2 weeks, right? So it would be a trade, right? I would probably want to close this position prior to earnings, because Tesla issue is margins, right? This price war where they're just lowering. Now they announced they're lowering the prices in Japan. So everywhere they have given significant discount, and they have meaningful contractions in their margins, right? So if their margins went from 25 to 11, the next one is 5%. Well, I don't know. The street is probably not going to be very delighted by that. If their margins expand from 11 to 15 or 17, okay, then the rally continues on. So if you trade, you can trade anything, right? This would be a 2-week trade. You have a clear defined stop level, 275, right? As long as it's above 275, it can continue going higher. So for Tesla, maybe that's a good setup, right? So you have 275, I'm out, and potentially can get, I don't know where the next overhead resistance. You can get to probably, 310, right? You can get to August. So it's been underperforming, right? It hasn't reached the August high. So it hasn't even reached the August high, Tesla. So it's kind of doing a catch-up trade if you compare it to Microsoft, Google, or if you treat it as a tech or AI stock. Whether this is a tech or AI stock, we can debate, but it just depends on Tesla. But that would be my setup. If I've got hedges, should I hold on to them? Victor, personally, I have hedges. I am holding on to them, right? Because I'm bearish on the market. If you're bullish on the market, I would still have maybe, again, I would say 4 positions on average. Right now, if you're a strong bull and you have a strong conviction that the earnings season is going to be great, okay, then you have 3 bullish and I would still have 1 bearish position. Right? It's not the question, should I hold on to my bearish or not? It's the portfolio composition. If you're bullish on the market and you think we're going to have a better than expected earnings, I would say 3 bullish, 1 bearish. If you say, I have no idea, okay, then 2 bullish, 2 bearish. If you have a strong conviction that this earnings season is not going to be as great as everybody anticipated after 40% historical rally, just like bears got squeezed, at some point bulls will get squeezed. When will this happen? That's a little bit difficult to determine. But we are overstretched levels. But at what point elevator up, at what point elevator down, you just don't know, right? You don't know. But we are approaching these August levels, and it's already 2 weeks into the earnings. So we're either going to have a breakout of August highs after the earnings, or we're going to have elevated down because margins are just not what everybody expected. Tesla did gap up Friday. This was a continuation trade from Friday. For now, it's kind of not going anywhere. Meta, elevator up. Right, there are also AI, right? Meta is just kind of a elevator up. It's way above August highs. It basically, I think, recovered, almost all the losses in 22. Right? And it's facing this gap, the earnings gap. And the same thing, right? Marketing, advertising. If we're in a recession and everybody's pulling back, then it basically almost closed in all the losses from 2021. Right? It's not that far from just all-time high. I mean, still ways to go, but it's facing a lot of overhead resistance. This is actually August 20 high that it had hard time breaking through until almost at the peak of the bull market. And this is the initial gap from the earnings, right? So, right, if the companies are not experiencing any recessionary pressures and they're spending on advertising, then it's going to be up, Otherwise, it's going to pull back. Meta slow, steady climb. Right, all these stocks slow, steady climb, and now earnings, right? So in the next 2 to 3 weeks, you can either have kind of buy and rumor sell the news, right? We can have an extension of this rally, or it's going to pause, consolidate, and then based on the earnings, it's either going to gap up or gap down, right? And probably, I think the risk is to the downside in most of these names, unless they deliver some extraordinary, earnings, right? Their PE ratio is 27, right? It was as low as 15, right, in 22. So their multiple double. So their revenue has to start expanding, right? They can't say, well, we have negative earnings growth. Right? That would not be good. Quantum computer, IonQ. I mean, good. I mean, strong rally, right? There are still, right, computer processing hardware participating in AI, right? I think we looked over this. Continues to gap up. A lot of overhead resistance, right? We've been here in February 21. Same thing. We wanted to break above 15 level. Right? If it breaks above 15 level, then I think there is more continuation to 18. But until it breaks 15 level, it might go through consolidation. But good trade, very nice, good volume. Okay. Self-contained kit that assists software development and building workflow on quantum computing. Okay. Yeah, NVIDIA always participated. They always had the API for developers, right, for fast processing. That's why NVIDIA is, So thank you, Bob, for sharing. All right, meanwhile, let's see. Yield, not a lot of movement. Let's see, where are we? So we're approaching Friday's session high. Right, we're as low as 378. So dollar kind of not going anywhere, flat. QQQ is flat, SEM is down 70 basis points, Spider slightly lower, small caps down 60 basis points, and Germany and Europe more meaningful pullback, China more meaningful pullback, over 1%. Other than that, you do have a rally in crude oil. Looks like crude oil continues to rally. It is facing overhead resistance from June 28. And so it's approaching June high. So also slightly overstretched, but up 2.5%. Bitcoin down, NVIDIA turning positive. Okay. Pat, Chewy is in downtrend. Is so where's the good support? Chewy. Retail stocks, right? Retails have been under pressure. Right, same kind of a head scratcher for bulls. If unemployment is low and services is high and people are still have jobs and record savings, why is XRT at at this multi-year low? Chewy is in that category of retail stocks. Price pattern doesn't look any different. I mean, support is obviously 2023 low, 2022 low. 2023, 2022, this is historical low, around $22.30. It's a weak stock. It's in retail. We are approaching the earnings season. If retail gonna come out and say, listen, it's only getting worse, it's not getting better, because consumers are still pressured by inflation and they don't want to, shop in Macy's and Home Depot and Chewy, then, we will revisit 29, and after 29, we'll revisit 22. Right? But it's extremely bearish price pattern, right? It's extremely bearish price pattern, and I think it did break through this level. But still, I mean, it's very weak stock. I wouldn't be too excited about this stock. Again, if it's an investment and you believe in the company and, everybody has pets, I mean, the pressure here is that, everybody was having, during COVID, during lockdowns, everybody wanted to have a pet to help them deal with loneliness. Hello? What was that? Sorry. Some kind of noise. Sorry about that. So, so now the trade is the reverse, right? Everybody's forced to come back to work, right? A lot of people are, getting notices that they have to go back and at least, 3-4 days a week spend in, most of my friends at least, 3 to 4 days. So now what do you do with your pets, right? That you don't, that you're not home. So, and that's the trade. How long does this will last? It could be, I don't know, end of the year, it could be until next year. I think long term, if you're looking into the next, 3-4 years, I mean, it's a great company. So at some point it will rebound. But until then, it could be at 30, or it could be, it could be close to 20. Just depends on the earnings. All right, thank you, Fred. 9:12. Any other questions? Any questions on Discord? Did I miss any questions on Discord? It's May 17th. Okay. It's for me. Okay. So no questions on Discord. Thank you guys for participating. Let me. Absolutely indignant. Thank you for participating. See you guys tomorrow morning. TJ, any idea what in Russia? So what's going to happen in Russia next? From what I mean, I do follow several bloggers. My understanding that this is a beginning of the end of Putin's regime, right? Same thing. To time it and decide when is it over, it's going to be very difficult task. But it looks like there's a lot of instability and vacuum, especially that Wagner group got removed. Also, a lot of uncertainty about that. I think that these mutinies type of insurrection, I think they will continue. I don't think it's going to be like Turkey, where there was one uprising and they squashed it. Here, because of the war, and there's a lot of militia and military running around, and especially if Ukraine is going to start making more progress on the counteroffensive, which I think they will. I think sooner than later you will have some kind of at least reappearance of this instability. So, I mean, right now I don't think it's baked into the stock market, right? Nobody really worried about, right? Wheat prices are still multi-year low. That's probably a good proxy, because Ukraine and Russia is, this is one of the biggest exporters of wheat. So, right now, stock market is not factoring any geopolitical risks. I think there are geopolitical risks, but again, timing them is very difficult, right? There's also this worry about, the nuclear station in Zaporozhye, south of Ukraine, Zaporozhye nuclear station, that there might have some kind of accident. Looks like the President Xi already talked to Putin again and said that there cannot be any use of nuclear weapons. So for now, everybody thinks that Putin still has it under control. But it's a concern. It's a concern that hasn't spilled into the equity markets. John, yes. Scott will do the closing bell. Everybody, thank you for participating on YouTube. Few announcements. right? One is that if you are trading options and you're spending more than $10 a month, which if you are trading at least once a week, you probably are, then consider joining Yellow Tunnel Tradier. It's a brokerage firm. They have they have an office in Chicago. I know these guys. US-based company. If you're an active option trader, it's a really good platform, right? It has a lot of bells and whistles for active option traders. Right? We have a few people already taking advantage of this. So see if this is something that can work for you. And in terms of YouTube, we do have broadcasts. I know few people are watching now. There are a lot more people watching the recordings. So if you are watching live or recording, click on subscribe and please participate in the closing bell. Thank you. Bill, thank you very much. Thank you for your kind words. Thank you. John, thank you. TJ, thank you. All right, 9:18. Okay. So Scott will do the closing bell today, and I will see you tomorrow morning. Thank you very much. Thank you, Todd. Faust, thank you. Have a great day.